Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the three advancing soldiers pattern. The advancing soldiers. Three white soldiers is a bullish candlestick pattern that predicts the reversal of a downtrend. The pattern consists of three consecutive long-bodied candlesticks that open within the previous candle's real body in a close that exceeds the previous candle's high. These candlesticks should not have very long shadows and ideally, that's the thing, ideally open within the real body of the preceding candle in the pattern. So it always doesn't always add up that way. So ideally it opens within the real body of the preceding candle, and ideally it predicts a reversal of a downtrend, but that's not always the case. You'll see many times three advancing soldiers happening in an uptrend. So again, just be aware of the actual patterns and how they work. You'll see this is Investopedia.com's example. Obviously, it's a kind of basically a perfect looking example of it. So I'm going to show you very similar ones, but some that might have some things that are off a little bit with them because that's trading. That's the real world, and that's how charts look. There's real world charts not always looking perfectly. So let's get into it and take a look over at Apple. So Apple, you can see nice bear flag here, somewhat like of a bear flag here. Found kind of a base. You can see kind of the buyer, the bull started to come in, said no more, let's push it back up. And then here you go, three advancing soldiers. This is a really perfect looking one, right? They're not always going to look this perfect. So you can see big green candle. The second green candle opened within the body of the first one. And then the third one as well. They all close near their highs. And then, so this is something that's very important to keep aware or be aware of. In trading, this is like it's a rule, but it's not necessarily a rule, meaning it's something to be very aware of, but it doesn't always happen exactly. Be aware of when a stock goes up and has 3 green days or 3 red days. Be aware of a potential reversal. So if a stock has 3 green days, be aware that the shorts are going to want to start to come in on that, right? So they're going to be very aware. Again, a stock might go up for a 4th or a 5th day, but just be aware the shorts are going to want to come in and try to short that thing very shortly on that 4th or 5th day. Again, it's not going to happen all of the time 100%. Just be very aware of three days. Same thing with 3 red days. Be aware of the buyers wanting to come in to potentially start to buy it back up. So the 3-day rule is more of a be very aware of it. And so you can see here, it had a 4th day, right? And then the bears started to try to come in to push it down. And then you had some consolidation, which turned into a nice bull flag. So that's a good thing. Doesn't mean the stock's going to tank after 3 green days. It just be aware of the bears wanting to come in to want to push it back a little bit, pull back. Same thing for the reversal with 3 red days. So this is a very perfect looking 3 advancing soldiers or 3 white soldiers pattern. Let's take a look at some other ones. Let's take a look at AAL. So, AAL, another really good looking one here. You have a bear flag here, bear flag, kind of like a bear flag. And the bulls kind of came back in, said no more, let's push this back up. No coincidence, obviously, that it's right at the 200 SMA. Very important to be aware of these moving average lines and see how these candlestick patterns work within moving average lines. Many times you'll see reversals happen when a stock gets overextended or when a stock starts to get towards oversold areas. Again, if you have a really good stock, it kind of wants to come back to equilibrium, those moving average lines. So eventually when a stock gets overbought or oversold, they want to kind of bring it back more into equilibrium. Doesn't always happen when you think it's going to happen or when it should. Again, stocks, it's always the battle between the bulls and the bears, but realize if a stock is a really good stock, it's going to want to come back, like kind of snap back to those moving average lines. So you can kind of see right here, it's starting to fall and it's like snap back right back up. And again, right near, obviously it's quite a bit below this 200 SMA, but you can see right here, bulls came back in, big green candlestick, closed above the 200 SMA. Look what happened here. Right up, again, you can see here the 9 EMA. Very important to keep aware of. And then you can see right up here, got back above the 9 EMA. Then some indecision. People were scared off by this 20 EMA, or made them, some indecision. And then you can see some indecision trading sideways, and then it went up. But you can see these candles started getting kind of sloppy after that. So again, 3 advancing soldiers, 3 white soldiers. Remember, like I said, be aware after 3 green days. You can see, the bears started to want to come in. These candles started getting smaller. These spinning tops, indecision. So be aware the shorts are going to want to come in. Let's take a look at PRAA. Go back over here. And there we go. 3 advancing soldiers over here. Kind of medium-sized candlesticks. Again, be very aware. No coincidence. Look at this happening right at the moving average lines. Very important to see. You can kind of see, like, there's also some other similar ones right here. You can say this is a 3 right here. Let me zoom in right here. You're going to start to see these patterns everywhere when you really start taking our course and looking at these patterns right here. I'd argue maybe that's even better than this one. Very similar, right? 3 advancing shoulders. What I tell you after those 3 green days, be aware of the shorts wanting to come in here. Boom, right here, wanted to push this down, right? Now, this is also really important to see. Take our other courses, or take our candlestick course. But if you look here, we're going to say there was a 3 advancing soldiers followed by, this is an evening star doji pattern, right? So green candle, stock closes above the previous green candle, and then the third candle opens below that second candle and then closes below it. So 3 advancing soldiers followed by an evening star pattern. Look what it did. Bam, bounced right off the 20 EMA. No coincidence, right? Moving average lines are key, but the moving average lines don't mean anything unless you know these patterns, right? It's not just a green bullish candlestick and a red candlestick pattern. You got to look at all these patterns within the pattern. So important to pay attention to. You can see right here, this is a 3 black crows pattern, just the opposite of the 3 white soldiers or 3 advancing soldiers. And you can kind of say, again, doesn't mean after 3, you can see 1, 2, 3, 4, 5, 6, and then you had the reversal. So the 3-day rule isn't always perfect, but look at this right here. Very important to say, after I said after 3 days, be aware of the bears wanting to come in. Look at here, kind of a spinning top pattern. They wanted to, there was some indecision. Be very careful. All right, let's take a look at a couple more examples. HCP. Let's zoom in here. All right, so it's another example of it's not always going to look perfect, right? So you can see big green candle, but this green candle right here, the second one, didn't open within the body here, but the third one did. So you wouldn't discount this and be like, okay, that's not 3 advancing soldiers. It doesn't matter. It's still 3 green candlesticks that kind of have some whole bodies that are closing near their highs, except for this one right here. You had a 4th day, right? But what happened on the 5th day? Some indecision, right? Be aware, at some point, it can only go up so far because look at over here. RSI is overbought. What goes up must come back down at some point. Doesn't mean it's going to tank, but the stock wants to come back to these equilibrium lines, these moving average lines. So you can see overbought wants to come back to the moving average lines. Once it gets oversold down here, it wants to gravitate back to the moving average. We'll take a look at maybe 1 or 2 more here. AMZN, Amazon. And here we go. 3 advancing soldiers. Not, the first green candlestick wasn't big. It's kind of smaller, right? Right at the moving average lines, no coincidence. Second kind of medium one. Third one looking real good. Starting to broach near overbought, but not really. It's not there yet. But what did it do? Little bit of a pullback, right? So it doesn't mean shorts, meaning like the stock's going to tank. It just mean people are going to profit take, right? And then look, pulls back right towards the moving average line, the 9 EMA, and then kind of bull flagged up, kind of went up a little bit more before it started reversing. Let's do one more here. FC. That's kind of one, but not really. You know, it's like 1, 2, then you have a third one. Again, remember, like I said, right? After 3 green days, you could already starting to see on the third one here, or you could have said that's kind of one. Some indecision. These indecision candles, be very careful, right? And then you can see bears starting to try to come back in and push it back down. Then it starts to get to mess up here on these candles. But look at, very important. Why did all this indecision and messiness happen? No coincidence. The stock is overbought. People want a profit take. And then boom, timber. Doesn't mean it's always going to tank. It could go back up again, but that's where you got to watch the moving average lines and other patterns. Where is this one here? So you can see actually a couple different versions of it. Here's 3 advancing soldiers, but actually you can kind of say 4. You can say these 3, or if you want to say these 3. Again, don't bog yourself down with like, well, there's 4 and not 3. Who cares? You know, just be aware of what's happening. The stock is moving up. So this is what I was trying to say. It's not always after a downtrend. This isn't an uptrend. You can see over here, uptrend, right? So it's not always in a downtrend, right? So you can see there's actually 4 candles. Look at this on the 5th day. Started to kind of push it back down, kind of bull flagging a little bit, went up a little bit, and there you go. Be aware of these patterns. You can see it's kind of moving up this where, you know, so you see here 1, 2, 3, 4, 5, 6, 7, 8. So it's not always the 3-day rule, but as you can see, once it starts getting overextended on the RSI, overextended up here, it's going to want to move back to the moving average line. So very important to understand.